property owners can deduct expenses like mortgage, interest, property taxes, insurance, and maintenance from taxable income. This will reduce the tax amount that you have to pay. Do you understand that for your own property, I can tell you certain things I cannot deduct, but for your real estate property, you are able to deduct those expenses. Property taxes, insurance, maintenance from taxable income. I found this so sweet. And every year I wait for it because I look at my properties. I connect with my accountant always at the end of the year because she always makes sure, because she's also a real estate investor and understand the impact of taxes, that she makes everyone provide her information prior to December 31st. Do you know why it's prior to December 31st? Because you could make changes before January 1st. Because once January 1st of the following year comes in, there's nothing you can do. So up until December 31st, but she doesn't want us to wait until December 31st. By November 30th is a deadline to provide her with everything so that she can go over everything and anything that we need to do to change so that the year that we are in, whatever is impacting our tax burden can be reduced. And she'll go over it with you. Why is that matter? Because real estate offers significant tax benefits, and that will help you to keep more cash flow and overall return on your investment, right? Remember, we spoke about cash flow. Cash flow is everything that you paid that you have. The cash flow is what you have after you paid everything, all your expenses. Imagine you could have more of cash flows in your hand than less. So in overall, it is a great thing to be on top of your taxes, to have an accountant, someone who knows real estate very well and will advise you accordingly. Another matter I wanted to talk to you about is exit strategies. What are they talking about when you hear people mentioning exit strategies? Because as a real estate investor, this term was new to me because I don't know what that means. Even though I did have my own property, my own home, I didn't know what exit strategy is, what people were talking about. What do you mean exit strategy? Basically, this is before you even purchase the property, you should know what you're going to do with it. How long you're going to keep it? In other words, what are your plans? Is it for buy and hold? Is it to fix or flip? What are you going to do with it? So one of the very first thing I know is when I buy a property, I always say, hey, I am going to keep this property, this rental property, for 5 years. So when I'm ready, I will sell the property for a profit. That is one way to exit this investment. Or I can do seller financing with it if another investor wants it. There's so many. This is what we mean by exit strategy. Is it something that I want to hold on, now have someone else pay me for it, especially if I owe it free and clear? You could do creative financing to have someone else take over the property, but they paying you. It just, I don't know. When I'm talking about this, I get so energetic. I get so excited because there's so much you can do. But one of the strategies I often have is to sell the property after I hold it for a couple of years.